I mean, the gigantic financial crisis that's coming because of all the debt that we've taken on and that we continue to take on is looming out there. We've blown it on a biblical scale. A gigantic financial crisis is coming, and you might get rich if you play it right. And that's what we're here to do, right? We're here to help people figure out what the right things are to do and when to do them.
Hello and welcome back to Soar Financially, and I'm going to say it, where we discuss the macro to understand the micro. My name is Kai Hoff, and I'm the @JR Mining Guy over on X, and of course, your host of this channel. And the reason why I said that little tidbit about the macro to the micro is we have John Rubino joining us. He's the founder, editor, and the brains behind Rubino.substack.com. Over 20,000 subscribers already, and I'm excited to have him back on the program. Point is, we're going to start with the macro and then focus on the micro, meaning the mining stocks. That's sort of the micro for me. Of course, everyday's life is also micro, but mining stocks today is the meaning of micro for me. We'll talk about those towards the end of our conversation. Timestamps will be provided if you want to jump to that part. But if you want to understand what's moving markets right now, you got to listen to the whole spiel here. So stay tuned for that. Before I switch over to my guest, hit the like and subscribe button. It helps us out tremendously. I know 75 to 80% of you are not subscribed that are watching. Please change that. It helps us out tremendously, and it's free. Thank you. Now, John, it is great to have you on the program. It's good to see you again.
Hey, Kai, good to see you too. A few things have happened since we talked last, so I think we'll have
we have to catch up. It's been like 7 or 8 months. We've seen each other in person before, even after our last interview, which was in Port Angeles. We went for breakfast, which was phenomenal, and but we have lots to catch up on, so we might as well dive right in. John, it's like, instead of the typical question about the economy and the state of the economy, I'm going to ask you, what is keeping you up at night? Like, what gives you sleepless nights right now, John?
Well, still, the thing that gives me sleepless nights is what has done that for the past few years, and that's war. We spent the last 3 or 4 years blundering into World War III, where we're, our ships are bumping up against Chinese ships in the South China Sea, and we're sending American-made and managed weapons over to Ukraine to be used against Russia, the world's biggest nuclear power. And then the Middle East is on fire, of course, and we've got, proxy armies rampaging around, fighting other proxy armies. This is a very, very dangerous time. In part because of U.S. stupidity, I've got to say, it's our fault in a lot of cases that these things are happening. And also because over the past 20 or so years, we've developed some hellacious new weapons, just things that are almost inconceivable when they're unleashed on the battlefield. We haven't used them yet, but the next war could be the war in which we use things like EMP weapons and cyber attacks that knock out banking systems or power grids, or hypersonic weapons, or AI piloted drone submarines with nuclear weapons. We've got all these things out there. And bioweapons. All this stuff is out there waiting to be used. And if we blunder into something where one side or the other feels existentially threatened and they let loose with these weapons, there's no way to know what's going to happen. And it kind of brings to mind that the quote that gets attributed to Albert Einstein that says, the next war will be fought with missiles, but the war after that will be fought with sticks and rocks, because we will destroy human civilization if we let all this stuff go at the same time, with absolutely no way to know the details. But we know it's going to be incredibly destructive. And, the U.S. in particular has been kind of acting like they want something like that to happen. And it's terrifying. And, as the father of 2 sons, especially, I really don't think I want to see my kids be incinerated in a nuclear holocaust. And that's kind of what we're almost trying for now, and it's terrifying. But having said that, the last election might change it, because we kicked out the warmongers and we brought in people who are at least talking about closing down the forever wars and pulling back from the abyss. And here's hoping. The next 6 months or so will tell us whether that's actually true, and I really hope that it does. so that we can go back to being kept up at night by simple things like financial crises and what the price of gold and silver is going to be. Those were happier days, even though it was still kind of apocalyptic. It was way simpler back then.
Yeah, I appreciate you trying to hit a positive mood here, or a positive note, or some nicer tone. But I do have one last maybe follow-up question to what keeps you up at night. And I mentioned it to you before hitting the record button, is but it almost feels like we're in a stealth war or world war already. We have Chinese ships dragging anchors across the Baltic Sea floor, destroying cables, pipelines being blown up in the Baltic by who knows who. I'm sure people know who it was and who was the target, but aren't we seeing that already? There's so many random acts of terror. I actually talked about this with somebody the other day, just 2 days ago, actually, in a meeting. Aren't there so many? Let's call them acts of terror, but aggressions in the world that it's almost already happening. I don't want to go down too deep that rabbit hole, but I'm curious what your thoughts are.
Well, yeah, you can call these things low-level acts of war because, for instance, I'll just go out on a limb and say, obviously, the U.S. blew up the Nord Stream 2 pipeline, and that was an act of war against both Germany and Russia. And so when you start taking out people's infrastructure, that can legitimately be interpreted as prosecuting a war. So yes, we are there in a lot of different places, in a lot of different ways. And again, here's hoping we pull back from it. But so much of this stuff can be fixed with a phone call. That's what's so wild about it. I mean, the Ukraine thing is very easy to settle conceptually. You just agree that Ukraine's not going to join NATO anymore. And Russia agrees to pull its soldiers back to some, predetermined point. And then that's basically that. The war stops. And that is literally a phone call from Trump to Putin. That's all the harder it would be. And so hopefully that happens. Same thing with China. We cut a deal in which China agrees not to invade Taiwan, and we agree to do some other things like pull back some military bases around China, and the pressure is lessened that way too. These aren't really complicated things because we've been blundering into them, and it's when you're blundering. It doesn't take a lot of common sense or a lot of conceptual processing power to stop blundering, and that's what we've been doing. So stopping it wouldn't be that hard. It's really nice to see people like J.D. Vance and Tulsi Gabbard gain a little bit of power over our foreign policy. Although, Trump is also naming a lot of neocon swamp creatures to positions of power in national security, too. So it depends on who wins those internal debates. But that's better than having everybody, every agency in charge run by neocons in the U.S., the way we've had it in the past 4 years. So, by the way, neocons that's short for neoconservatives. And those are people who believe that the United States should rule the world for the next 1,000 years. And whatever wars we have to fight in the short run to make that happen are actually good things because they lead to this great outcome, which is the 5% of the population that lives in the U.S. ruling the 95% of the population that lives in the rest of the world forever. And so, that sounds crazy. And I agree. Those guys they're psychopaths in a lot of cases, and they should be swept out of office. So we'll see how that goes. If that's what happens, it would be a very good thing.
Yeah, nobody wants war. I think we can all underwrite that statement. Nobody wants war, and there's solutions. And it feels Kai,
if I could interrupt for a second, yeah. That's not completely true. A lot of people seem to want war in the American hierarchy, and that's what's so scary about it. These guys, their plans actually call for wars against China and Russia that break China and Russia and make them protectorates. So we get the manufactured goods or the natural resources or whatever on our terms. And that's an actual plan in the highest reaches of the U.S. government. And, it's pathological. It's crazy.
So most of our customers are just making individual purchases, but we have an option where people can sign up essentially for a monthly subscription or an automatic purchase. And the nice thing about the monthly plan is that you can just set it and forget it. You can put it on autopilot. You can sign up for a certain amount every month, whether it be gold or silver, whatever items you choose, and then give us a bank account that you want us to process the transaction through and what day of the month you want it done, and boom, it happens automatically. We either ship it to you or we can store it.
Nearly 10,000 people in that program, and it's been a tremendous success and something we've offered from day one. We're really proud of that because it's very unique in our industry. Most people have not figured out a way to offer that kind of solution at scale the way we have. And it's a wonderful way to be saving in real money, gold and silver.
It's very easy to enroll. You can do it through our website or over the phone. There's a minimum of only $100 a month. The maximum is really any amount. It's also easy to manage. Anytime you want to make a change, you can do that. You can quit at any time. It's very user-friendly.
It's actually, I made that statement before in another interview, but you need a common enemy to unite the people. To a degree as well. So you need to paint that picture of the common enemy, being it the Russians, being it the Chinese, being it who knows who, doesn't really matter. You need that common enemy to unite the people behind you for a common cause, right? And I think that's what they're trying to do, trying to unite people in that and pull for that cause, rightly or wrongly, that cause, like resource nationalism or just resources in general, being it oil back in the 90s and what is in Russia now? It's oil as well, I believe. And there's oil involved and oil money, petrodollar is a big topic. Yeah. No, you're right. And I appreciate you interrupting me there. I'm a bit naive when it comes to certain things because I definitely don't want war and I reflect that image on others. So
yeah. Well, yeah, I mean, it's true to say that regular people don't want war, but some psychopaths do. But yeah, the idea of a country that mismanages its economy, then looking abroad for an enemy that they can use to distract their people from their own mismanagement, that's very common and makes a lot of sense psychologically that if you've screwed things up, you want to distract people from your screw ups. And one way to do that is to pick a fight. And, first it was Assad. Well, a little further back, it was Saddam Hussein that we used for that role. And then it became Assad in Syria. And then it became Putin. And I'm sure it'll be Xi in China next if it comes to that. But that's just been our pattern in the US and in NATO for the past few decades. And, it has worked well enough that those guys are still in power.
Like I often skim headlines, and one thing that has me a bit positive, it feels like, and that's more gut feeling than overall like percentages or anything. The mood in the Ukraine is softening, meaning like I read one headline: NATO rushes weapons to Ukraine to boost Kiev before truce talks. Just the two words of truce talks in that headline it shows to me that there's a bit of a softening stance, and that's a positive. I'll take that as a positive. So
yes,
it might be going in the right direction. So let's put a bow around that. You want to talk about more positive things, which is the financial markets. Let's do that. But is there anything in the financial markets that gives you sleepless nights? Perhaps the U.S. debt?
Oh yeah, I mean the gigantic financial crisis that's coming because of all the debt that we've taken on and that we continue to take on is looming out there. And but it's harder to think of that as something terrifying because right now we can compare it with World War III, and it's nothing compared to World War III. We've had a lot of financial crises in the history of the human race, and the civilization has survived at least, and probably what happens this time. I mean, there are different scenarios for this to play out, but a simple, straightforward scenario would be for the debt that we've taken on so far to increase both inflation and interest rates. And rising inflation contributes to rising interest rates. That makes the interest cost on that debt even more onerous. And because that interest has to be borrowed, it makes the debt go up even faster. So we get into a doom loop, basically, where rising interest rates lead to rising debt and so on until the thing just blows up. I would say we're not far from that now, because if you look at the chart of the US government's debt expense, it's parabolic. It's going straight up right now, which means we're going to have, $1.5 trillion of interest costs in the not too distant future per year, which means the debt has to go up by that much in addition to our increase in debt to cover baby boomer Social Security and Medicare, et cetera, et cetera. And, at some point people figure out that why do you want to own the currency of somebody who's going into debt at such an accelerating rate? And then you get the financial crisis that leads to the currency reset. All of that is, it's scary, but it's also something that has happened enough times in previous human history that we kind of know how it goes, to the extent that it becomes an investment thesis. So yeah, all this stuff that is financially terrifying is coming, but there are 3 or 4 different ways to make a lot of money in the process. So it's almost an optimistic scenario because it's potentially that's how you get rich. That's how you become the person who saves your friends and family with all your extra capital when we're at the bottom of the cycle and rebuilding from the rubble. And if you focus on that, it's not a depressing prospect at all, or a scary prospect. It's an exciting prospect because your gold and silver is going to go way up, almost certainly, and possibly your big tech stock shorts are going to do the same thing. So the big short scenario that flows from all this is a little trickier than just buying a bunch of gold and silver, but it's there too. So there are the things that if we time it right, choose the right instruments at the right time, insane amounts of money can be made from all of this. And I think that's the takeaway, that we've blown it on a biblical scale. A gigantic financial crisis is coming, and you might get rich if you play it right. And that's what we're here to do, right? We're here to help people figure out what the right things are to do and when to do them, so that they end up being the winners in this cycle.
Absolutely. And I think I'm going to call this video, or title this video, John's 4 Ways to Get Rich in a Crash. So we're definitely going to use that for our YouTube title. But let's get a little more granular. So we talked U.S. debt, and especially interest payments on the U.S. debt, 1.5 trillion. It's insane. I was just reminiscing, sitting in New Orleans about 2 years ago, talking with Brian London at his conference, and we just talked about, we might break through $1 trillion here in the next 6 to 12 months. Now we're talking about 1.5 trillion. And that's just 50% more within 18 months. So I think we're already in that death spiral because the pace is insane. That number is growing, I think. It's like, how can we put a stop to that? Maybe that's an honest question here. Like, how can we put a stop to that? Like, what are the scenarios that you foresee?
Well, the really optimistic scenario in which we are actually wise would be for the major governments of the world just to recognize that they're in an untenable position, and then they just do the monetary reset. They give up the power to create more money out of thin air, and they go back to something like a gold standard, or, I'm not ready to call for a Bitcoin standard yet, but it might be some kind of blockchain related thing. Maybe it involves gold and silver. It could be any number of things, but the common thread is that we go back to sound money of some sort that takes away from governments the ability to just create money out of thin air and limits the money supply growth going forward. You could do that. Again, it's like a few phone calls and then an announcement on Sunday night, and you're there. I don't think we're smart enough yet. And I think the people with the power to create money out of thin air aren't going to give it up willingly. So more likely will be the scenario where the markets just force it on governments. In other words, like I was saying, interest costs start to spike, deficits go up even faster than they are right now. People lose faith in the currency. That's the crack-up boom from the Austrian School of Economics. And they just dump dollars and euros and yen when they get them. They buy real stuff. The price of real stuff like gold and silver and farmland and oil wells goes through the roof. And the currencies just fall into disuse, basically. They are just given up on by everybody. So something new has to be built from that systemic rubble. And then at the bottom, you have everybody getting together, very chastened, and talking about what they can do going forward. And so in that scenario, the people who get burned are the ones who trusted the government. In other words, the people with bank accounts and government bond funds and a lot of cash sitting around, that cash becomes much less valuable, and so do those bonds. So their wealth shrivels. And the people who didn't trust the government, the gold bugs of the world, the people who own high quality gold stocks and gold and silver in physical form and other kinds of hard assets like oil stocks and copper miners and things like that, they tend to do much better. And that's the more likely scenario, I think, because I don't think governments will give up without a fight. And that fight is going to involve a currency collapse. So, the rest of the decade, that might be the big headline story of the rest of the decade.
John, I can't help but feel like you feel a lot more, or you sound like a lot more doom and gloomy today. Than our maybe previous conversation 8 months ago. Has anything changed? And I do mean that seriously. Is there any factor? We talked debt, of course, but have you looked at any other factors? Because I keep coming back to socioeconomic impact or the social impact of all of what we're discussing here. Because somebody's got to suffer for us to get rich to a degree. Let's be honest, right? There's going to be suffering. So I'm curious, what has changed your mood? You sound very doom and gloomy. Is there any other factors that you're considering, perhaps?
No. As far as the financial system goes, I've always, or at least for the past 15 years, assumed it was going to end at some point in a probably fiery way. And I still think that the numbers have just gotten much bigger now, and things are moving much faster. So we're closer to the death spiral doom loop part of this story than we have been in the past. And then we were, when you and I talked, the government debt going parabolic, or the government interest on its debt going parabolic, wasn't quite as scary as it has become. It was probably approaching, like you said, it was approaching $1 trillion a year in interest cost, and now it's approaching $1.5 trillion, with 4 trillion or with 2 trillion not far away on the horizon. And somewhere out there is that number that blows everything up. What will interest costs have to be before people see this for the death spiral that it is? And it's got to be reasonably close to $2 trillion a year in debt in interest. So, in that sense, I guess I'm a little bit more apocalyptic about the financial system, because we're closer to the end of it, and the end is likely to be pretty spectacularly volatile, and unless everybody is very wise and they just one Sunday night announce a new gold standard or something like that. Even that hurts the people who trust the government. If you've got a bond fund and they announce a new gold standard where gold is, or the dollar is just defined as 1/10,000th of an ounce of gold, that means your savings account just lost 2/3 or 3/4 of its value. And so you pay a price for trusting the government. And we get some serious civil unrest when that happens. But that's the nature of a hyperinflation or a currency collapse. Look at Weimar Germany and what happened after that, or the French Revolution, which had a hyperinflation, and then they got Napoleon after that, which ushered in a whole generation of European wars. So, post-currency collapse is a very dangerous time, because people are pissed off, and when they're really angry, they're willing to consider, the strongman alternative, where somebody comes in and says, listen, I'll stop the bleeding and I'll get back what was stolen from you. Just let me suspend the Constitution for a few years and we'll do that. And people who are starving or who can't feed their kids are open to that argument. So that's the risk that we run if we let this thing go to its logical conclusion, where the death spiral actually ends up in death of the financial system. Then we have the danger of people picking dictators to fix things for them. And, when you do something like this, when you make a mistake of this magnitude, you end up with some kind of chaos afterwards. And we can hope that the chaos, that we get maybe somebody like an FDR, right? During the Great Depression, we could have gone the German route and had a dictatorship. But instead, we elected a guy who was, at the time considered to be a Bolshevik or something like that by a lot of people in charge. But he kept it together. And for, 15 years or whatever it was, he was in charge. the system survived and was ready to go on to the next stage without a dictatorship. We could have something like that. Though, what would be really, really ironic if Trump turned out to be the FDR in this scenario. That would be something that was unexpected 15 or 10 or even 5 years ago, but it's possible that he's a candidate for that kind of thing where stable, wise leadership gets us through the worst part of the crisis. And then we're able to be a functioning democracy going forward. So we'll see. I mean, there's a million different ways this could play out. And that creates the intellectual challenge is how do you prep for something like this, where there's a lot of different scenarios. All of them are kind of dire, or almost all of them are kind of dire, especially for people who trust the government. But they also contain a lot of opportunities for people who see it coming. Watch the movie The Big Short, and you see what happens when there's a big financial crisis coming and a handful of people see it ahead of time and make the right bets. And go back to the Great Depression, where a handful of people actually got much richer during the Great Depression by buying government bonds, which did very well back then. So there's always an opportunity in every big crisis. And there are always crises. By nature, we get overexcited, and that overexcitement manifests in the financial system as really extreme events and trends. And then those trends eventually revert to mean. In other words, you have a big crisis that takes you back to the intrinsic value of the assets of the world. The people who get it right are the ones who get rich in the process. So that's the challenge. What is it we should be doing exactly right now that 5 years from now we'll be really glad we did? And it's not 100% clear, but there's a lot of things that are high percentage bets at this point.
We'll get to some of those bets in a minute, but I'm curious. You just mentioned bonds. People got rich owning bonds, for example, and during the Great Depression. Is that something you would recommend right now? And what are your thoughts on the bond market? How scared should we be of it, or can it be a savior like it was in the past?
Well, Warren Buffett is buying a lot of bonds right now. He's selling tech stocks and big bank stocks and buying bonds. I think his rationale for that is that the next stage of this process is a equities bear market and a recession, which we're overdue for, right? We've had an equities bull market for basically since 2010, so 25 or 15 years, of a by and large bull market and an economic expansion in which we build up insane amounts of debt. So you would expect a recession to flow from that and an equities bear market. In that kind of situation, a lot of money flows into government bonds because that's perceived to be a safe haven. And so, in the short run, short-term bonds are probably fine because they roll over so fast that even if you're wrong and inflation just spikes from here, short-term interest rates will go up along the way, and you can roll those bonds over at higher and higher yields. Longer-term bonds are a little riskier, but potentially a lot more profitable so say we have a recession, equities bear market, bank failures, the yada yada, the whole list of things that go with deep recessions and equities bear markets. The government steps in and starts easing aggressively again. So we get back to 0% interest rates. Well, if you own a portfolio of long-term government bonds, you'll make a 50% or so profit on that, and that's what happened. Well, long-term government bonds were phenomenally good to own from basically 1980 all the way to 2022 or so. And we could have a quicker version of that this time around. So bonds might be a hedge against a deep recession and an equities bear market. That's possible, but they're emphatically not a hedge against what comes after that when the Fed steps in or all the big central banks just aggressively ease and devalue their currencies like crazy to prevent another 1930s style deflationary crash. So timing makes some sense here, and it's not perfectly predictable, but it's reassuring when big players out there who have a history of getting the cycles more or less right are looking at bonds. It's reassuring from a bond buyer's perspective. And then gold obviously looks great going forward, even if it has a little bit of a V bottom correction during a recession.
We'll get to gold in a second. I have one last question, maybe to clarify a little bit, because in my head, like we've been talking about it, more or less a debt default, and that we can't service interest payments, which is more like a government default at some point. And then we talked about the bond market, and you mentioned more of the recessionary trends that you're seeing right now in the market. I just want to make sure that it's clear that we're talking about two different things here. During a government default, you don't want to own any bonds. Is that correct? I just want to clarify that.
Well, there are different kinds of defaults.
Okay.
One is where the government just can't come up with the money to pay the interest, and that's not an issue for the U.S. We can just print it. We can transfer $1 trillion to some bank's balance sheet to cover the interest on their government bonds with a mouse click. No problem at all. The other kind of default is where you devalue your currency in a way that takes wealth away from the owners of that currency. That's what inflation is. Inflation is a slow motion secret default where the government basically harvests all the people that trusted it by making the dollar less valuable and making those people less well off, but without saying it's doing it. It's just creating a lot of currency and putting in the banking system to protect the very rich. But in the process, it defaults on its obligations to the owner of dollars and of government bond funds and stuff like that. That's the kind of default that's that's in progress right now, obviously, but is probably going to accelerate going forward until people figure out that it's happening. And then we bail, we bail on the dollar because they've bailed on us. So that kind of default, virtual lock in the next decade.
Virtual lock. That's yeah. No, it's like I tend to agree. I'm curious how that all plays out, especially in the next 4 years with a new president moving into the White House in January, and whether he can stop it, whether the DOGE, what was it called, government agency or department of government efficiency actually has an impact. There's a lot of talk, but so far I have to find somebody who actually believes in a change through that department. What side do you fall on? Do you believe they can actually have an impact?
Well, I think this new government is getting set up to do so many amazing things, like RFK Jr., the head of the FDA. That is too wild to even contemplate. And I think a lot of what he would do, if he ends up having the actual power to do it, would be awesome. The U.S. is the least healthy, rich country ever, probably, and it's the fault of big food and big pharma here, basically, again, harvesting people secretly. And it'll be fun to watch that process play out. And the DOGE guys also have a chance to do a lot of interesting things with government efficiency, like, buy something through Amazon right now, and then go and try and do something with the IRS or something. And you find out how different today's e-commerce is from today's government. So that means government could get phenomenally more efficient using the techniques that have been pioneered by Amazon and Google and companies like that. And we'll see if Vivek Ramaswamy and Elon Musk can make some of that stuff happen. And if they can, that would be awesome. And they're also talking about decentralizing the government, where they move a lot of agencies out of Washington and into other parts of the country to keep the guys running the agency from becoming swamp creatures. In other words, from shifting their allegiance from their home state to Washington, D.C. That would be great too. So, there's a lot of good stuff that could happen. And on the financial side, though, there's no way that DOGE is going to cut $2 trillion a year out of the federal government, just because so much spending is transfer payments. We transfer money to the big defense contractors who then build weapons. And nobody's really talking about cutting the defense budget in a nominal sense. In other words, making it smaller and bringing home all our soldiers from overseas. Nobody seems to be talking about that. And you can't cut Social Security payments or Medicare coverage, because baby boomers get that stuff now, and we're not going to let go of that. If you want to see a fascinating piece of civil unrest, well, try to cut baby boomer entitlements. We'll be out there in our wheelchairs, in the millions, protesting, and maybe violently so, because we just, this generation just won't give up the entitlements to which we have become entitled in our own mind. So you can't cut that. And if you can't cut defense and if you can't cut entitlements, you're not left with much. So there's no way they're taking $2 trillion out of the government budget. But, accepting that, they can do a lot of good stuff. There might be some really interesting things that happen in terms of government efficiency and in the guiding ethos of a lot of the bureaucracies. So I'm optimistic as far as that goes. But the finance thing we can't fix because we already borrowed the money. There's nothing we can do about that. And so the math of American debt and European debt and Japanese debt is pretty much an equation that has already been written on the blackboard. We have to have debt continue to rise, which raises interest costs, which further increases the debt, which hobbles a government at some point when they can't figure out how to cover their interest without crashing their currency. So that all has to happen still. And but again, financial crises, we survive them. Sometimes there's a changing of the guard of who the rich people are. And sometimes there's a lot of civil unrest and regime change, but civilization survives stuff like that. And that's the thing we can't really avoid right now. There's no way to fix $35 trillion of debt in an economy that's only 80% that big, with a deficit that's running at 5 or 6% of that economy going forward with no end in sight. That equation just doesn't work. It has an end point, and I think we're heading for that at an accelerating rate.
Absolutely. There's nothing to disagree with. I fully agree, and I'm based here in Germany. I'm interestingly watching how that, especially the DEUTSCHE department, plays out, because we could use some lessons over here as well. In government efficiency and maybe to right the ship as well.
Hey, Kai, Europe is a fascinating story right now. Is that something you'd be up for talking about a little bit? Because you got basically France and Germany having had their governments fall just lately.
Yeah, absolutely. Yeah. I'm not an expert on France, but Germany is everything's going haywire right now. The government has been dissolved. I haven't seen the news yet. The chancellor was supposed to ask for a vote of no confidence today, and put in the request for a vote of no confidence, which is supposed to happen tomorrow. But I haven't seen the news hit the wire yet, whether he's done it or not. Which is interesting because apparently government elections are supposed to be at the end of February, and the CDU, the Christ, what are they called in English? The Christian Democratic Party is supposed to come into power, but they're already starting to make mistakes before they even been elected. They're already saying, "Oh, we might use the same economic minister again. He's the guy who got us off cheap power." Just they're repeating the mistakes and pushing us very far to one side of the spectrum, either very left, and I'm fearing it might be very right. Just because people want pragmatism and people want to understand what is actually why are we suffering? Germany's in a recession. It's not being talked about in news headlines, but I just read it last week again. The IW is one of the institutes that does economic forecasts in Germany, said, well, we've been in a recession for 2 years and the growth next year looks terrible as well, maybe 0.1% growth next year. So that's, for me, that's a nothing burger again. And people are tired. They want change. They see it. There was a graphic circulating Twitter just today. We have Dunkelflaute, meaning it's too dark and the wind is not blowing. So our energy cost per megawatt hour is 936 euros per megawatt hour. It's the highest in Europe by far. Finland is 40. France is 200 and something euros. People are starting to wake up what's going on. I think we're all agree that renewable clean air, everybody wants that, but the cost is starting to get too expensive. We're seeing Volkswagen. I'm going on a rant here, by the way. You got me triggered. We're seeing Volkswagen laying off 30,000 people because the ESG initiatives didn't work. People are not buying the electric cars at the rate the government wants them to buy because they stopped subsidies and then people said, well, it doesn't make any sense for what we're doing. So Volkswagen has to close factories. Shut down production. It's also all the other car manufacturers as well. They're starting to hurt. Not as badly as Volkswagen just yet because they went full electric more or less as one of the first ones. And I was hoping that was a wake up call, but it hasn't really hit yet, I think. And it's slowly starting to trickle down, and people are starting to wake up. And it looks like the next government is starting to make mistakes before we even have a chance to elect them. So it's going to be an interesting next 6 to 10 weeks here in Germany when it comes to that. And we'll see what the outside influences tell us as well, especially when in January, about 4 or 5 weeks before our German election, a new president moves into the White House on Pennsylvania Avenue. So that's sort of what those are my 2 cents on that topic. And I'm getting really worked up, especially on the energy topic, because it's so easy to avoid. Our CO2 emissions are through the roof compared to France. It's absolutely ridiculous. And then we're complaining to France as well, for example, during the summer when we have to buy nuclear energy and they can't produce enough because their river levels are too low to cool their nuclear power plants. Like, it's absolutely moronic. I'm sick of it. I'm embarrassed. And that's that. So, I'm so tired of it.
Oh, yeah. I mean, what was that word again? Zunkenflauten?
Dunkelflaute is the word that's trending on Twitter today. It's really like we're great at creating words. Like Dunkelflaute is just like dark. Flaute means like it's a good translation for flaute. It's like when the wind is not blowing. It's just like so it's dark and there's no wind. So it's Dunkelflaute.
You guys really are great at creating.
It's phenomenal.
Precise words. Yeah. But so question. Can the EU survive in its current form without Germany as an industrial powerhouse? Because that could be one of the big stories. Yeah.
I think we can for at least a while, because our debt to GDP ratio in Germany is still very low, meaning it's only 62% versus France is 110, Italy is 130. So we do have some financial flexibility. Like, we've always been very cautious on spending, rightly or wrongly. Like, it depends on if all the drunken sailors on the ship start spending money like crazy, whether you should participate or not, or whether you're the smart one standing at the end. But if the world defaults around you, what good does it do you? So we'll have to figure that one out. But I think there's a bit of flexibility, is my point.
Because, I've had the sense that the reason that Italy and Greece and France and Spain could sell bonds into the open market was that the market perceived them to be German bonds, because Germany was backing up the ECB. And it seems like the big risk now is that people are going to stop assuming that Germany is just there with unlimited money to back up the ECB while it's bailing out all these other countries that they can't control their budgets. And then what happens? Does Italy's interest rate on its 10-year treasury bond go to 20%? And do they go bankrupt? It seems like there's a really dire scenario out there that starts with Germany no longer being the guaranteed backstop of the ECB.
There's a lot of political, momentum behind, like, a lot of, not political momentum, but there are a lot of political aspects to the whole thing. It's outside influence, like us decoupling from Russia is one. I think that the Western world, especially the U.S., wanted to see, and you talked about the gas pipeline being blown up by the U.S. There's a reason for that, probably. Like, they want Germany independent from Russia for whatever reason. We don't have to discuss that, but like, we got too close to Russia. The U.S. didn't like that because they want Russia for themselves to a degree, and they want that aggression. I don't know. I'm lacking word here. It's not aggression, but they want that rift, maybe. Rift is a good word, actually, for that. Well, they want that. Like,
the U.S. is terrified of a German-Russian alliance. Because historically, I mean, those were the two world powers that were scariest and most threatening to the U.S. And an alliance, German industrial power, Russian raw materials, would seem to be a big threat. And so that's probably the U.S. Point of view here, and that's probably what led to them blowing up the pipeline, because maybe they were choosing to try to deindustrialize Germany. While separating it from Russia, which, God, crazy.
If you think about it, like, what are the ramifications of that? Like, let's Germany tumbles. Like, the whole of Europe falls down. The U.S. loses a big partner. Yes, we're not pulling all our weight when it comes to, like, military spending and all of that. That could be rectified through political negotiations, I think. But I'm trying to figure out what the end game would be. Like, yes, you would have probably another, 16 countries, 20 countries that are dependent on the U.S. Is that the motivation? Probably. Like, I'm thinking out loud here, is like coming up with thoughts and conclusions on the go here. And when I say it out loud, it actually sounds realistic, but also kind of sad.
Well,
you know what I mean?
If you assume that psychopaths are in charge in the US who would consider stuff like this. It could well be that they wanted to maybe break Russia and Germany at the same time and then rule them both for the next 1,000 years. I don't know. It's
like,
terrifying to be in a country where those guys like that are in charge who might think that way.
yeah, they just cut off our cheap power, and that's why we're struggling here, and that's where my frustration comes from, because you see it now. Because it's not hitting me I'm in mining. Like I think I'm in an okay industry. I'm self-employed. I'm doing okay personally. So, but it's around me. It's happening. Like people working in the chemical industry getting laid off, and I see friends struggling to get contracts, and handymen that are good friends of mine, they're starting to struggle because they can't have enough. They don't have enough lead orders for the next year already. Like those are the things I'm worried about, and that's the stuff that frustrates me when I look at the energy costs. It's absolutely mind-boggling. How are we supposed to be competitive? We can't compete with a China or the U.S., which is probably one of the reasons, because they have cheap power. The U.S. is independent, an independent energy producer. They're the largest exporter of oil, and they can produce independent power. My friend in Utah, one of my best friends, he tells me he's paying 7 cents a kilowatt hour. I can't compete. I'm paying 39 or 35 or something like that. How am I supposed to compete? I can't even run my air conditioning all day here. It would be financial ruin. I'm exaggerating a little bit, but you get my point. It's moronic. How can our industry be sort of competitive? We can't. We're dead last in AI technology and developments. We can't run server farms. It's too expensive. We do have quite a bit of cloud storage here, which is interesting. I need to look at how much they pay. Actually, next door where I live, there's a big cloud farm. So I'm not sure how they're paying for power, but we're not really competitive on the bigger scale industries, things that made Germany great, like the auto industry and other heavy industry in sort of the Ruhrgebiet. So you triggered me, John, and I do apologize to my audience that we got completely off track here, because I wanted to talk gold the last 10 minutes with you, John, because you touched on it and I cut you off every time when you started on gold, but we need to talk about the precious metal.
Well, it's good we did this, though, because Europe is a big story that I don't think gets nearly the press that it deserves, because a lot of stuff is going to happen with you guys in the next couple of years. And some of it, at least in prospect, is kind of scary. So good.
Yeah, and I don't see any politicians that have any backbone right now, meaning they can actually stand up or change. It's the same old. Doesn't matter what party, what label you put on it right now, unless you go very far right, which seems to be a bit more pragmatic in my point of view, but really difficult to elect because there's a few party members that are way too far right, that based on history, we have bad experiences with that. Not saying we're bringing back dictatorship, but there's a few people that are a little too far to the right, probably. And then there's the extreme on the left, which is probably the BSW, which is probably a bit too close to Russia again, as well. So it's difficult, and there's nobody with a real backbone that you could say, let's throw him into the mix and let's vote for some real change. I don't see it. So.
Well, next time we talk, maybe we should block off some time to talk about euro shorting strategies, how we bet on rising chaos in Europe.
Yeah, no, we should, John. No, I appreciate you asking me that and that discourse. I think it's valuable. I hope it was valuable. Please leave a comment down below. We're happy to talk more about Europe and my feelings about it as well. But as I mentioned, John, we got to get back on track here for the last 10 minutes. We do have to talk about gold, and maybe we can throw in the mining stocks as well, as I threatened in my intro. But let's start gold. Interesting move post-election. We dropped $200. I'm curious, and maybe you have some thoughts on that. What did the traders and investors expect from the U.S. election outcome that they didn't see, or why did they hedge their bets and maybe sell gold again? Because personally, either outcome would have been good for gold, no?
Well, yeah, going into the election, remember the polls were a dead heat. And so there was this scenario where, it's like a 0.1% victory for one side or the other. The other side assumes that it's been stolen from them. They hit the streets, and then we have another month of civil unrest and lawyers and recounts and everything. So chaos. There was a very real chaos scenario in this election. It didn't work out. It turned out to be, borderline landslide, definitely a mandate for Trump, who is promising to stop the wars. So gold, which tends to go up in during chaotic times, and war is the ultimate in chaotic times, all of a sudden people were like, oh, World War III might not happen after all. Well, I can sell my war hedges, and gold is one of them. So they went risk on for tech and Bitcoin, and risk off for safety assets like gold. So that makes complete sense. Then after the dust settles a little bit, everybody starts realizing that the stuff we talked about today is actually true, that, okay, maybe we won't have World War III, but we're still, borrowing this much money. Interest costs are still doing this. Trump wants lower interest rates because he's a real estate guy. His formative experience with interest rates is that low is good, high is bad. And he's going to insist that the Fed start cutting interest rates. Well, that's good for gold. Okay, so people have been piling back into precious metals over the last week because they assume that the finance thing is going to be hard to fix, and the guys in charge are not equipped temperamentally to raise interest rates high enough to protect the value of the dollar and to throttle inflation. That's not going to happen. So we probably want to own inflation hedges. And there's really no end to that now. If people develop that kind of an attitude, and then you've got foreign central banks buying gold, which puts a big tailwind behind gold, and then regular investors and the rest of the financial markets in the US decide that inflation hedges are a pretty good thing to put their clients into. Gold and silver are such thinly traded markets. Gold, there's quite a bit of gold in the world, but most of it isn't for sale. So the available gold is an extremely thinly traded market. And so you could see a lot of people trying to get in through that little door, and push the price of gold way up. So to do a new gold standard in which, for instance, the outstanding dollars are backed 40% by gold, a lot of people who've run those numbers get a price of $10,000 US an ounce for gold to make that kind of a gold standard happen. So if that's our end game, and $10,000 an ounce is the end price for gold in that process, then all of a sudden $2,700 an ounce doesn't look crazy expensive. It feels like a good price considering where we've been, but if you look at where we're going, people who bought at $3,000 an ounce are going to be very happy when gold is $10,000 an ounce. So, that's the gold story in a nutshell, and it's very positive with some squiggles. There could be a recession that smashes gold down for a few months, but then the follow-on to that will be aggressive Fed easing, which will send gold back up towards 10,000. So, if your only risk is a short-term V-bottom correction, and your ultimate price, which is very easy to justify, is 3 or 4 times today's price, then it's easy to see how people can justify adding gold at today's prices.
I'm going to ask you a question I've asked Lynette Zhang earlier today as well. And I'm probably might ask it my couple next guests as well, because it's a good question from the audience. I picked it up in the YouTube comments, and it's a guest who says, "I own gold. I'm comfortable. I understand why it's going up. I'm happy to own gold. But can you make a decent bear case for gold as well? Like, why shouldn't I own it? Because everything I look at, and I fully agree, is like everything I look at, gold should be going much higher, $10,000." Sure. But is there a credible bear case for gold as well?
Well, there's a near-term bear case for gold. Look what gold and silver did in 2008 and in 2020, when we had really sharp stock market bear markets, really sharp corrections in stocks. Precious metals got sucked down with equities in both of those cases, and went down, 30, 40% or more in the case of silver. And that's a very real, I would call that a probability rather than just a possibility. So that's kind of a bear case for precious metals. You can make the case that you at least want to buy very cautiously now, and maybe even take some profits here in the expectation that you can get back in at that V bottom. Okay. The longer term bear case is less likely, but still possible. And that is that when we come to the crossroads of hyperinflating or going back to a 1930s style deflationary depression, we choose the 1930s, and decide, okay, we're just going to let this debt be wiped out via default. And in that way, we're going to, protect the integrity of the financial system and protect the value of the dollar. And then, once we hit bottom and we're no longer deeply indebted, then we'll do what we did in the 1950s and 40s and 60s and 70s. We'll grow because we have a relatively stable balance sheet. That's highly unlikely, but it's possible. But the reason it's unlikely is because that requires the people in charge to be this generation's Herbert Hoover. In other words, the guy that we still remember from 100 years ago who brought on the Great Depression. Nobody wants to do that.
No, it sort of fits. Like, we had Henrik Sieberg at our conference at Deutsche GOLDMESSE the other day, and he predicts a deflationary bust scenario where gold could also crash hard. He uses $1,200 and even to a degree lower. He doesn't say it's going to stay there at all. Like, it might be a temporary blip like we've seen in March 2020. Just that V formation, as you mentioned, like it hits that low and then sort of rallies back up. That sort of fits what he's been saying as well. Maybe you haven't mentioned 1,200. You mentioned 30-40%, which is a crash to maybe 2,000, 1,800 again, which we weren't too far off, which we just came from, more or less, earlier this year. So it's an interesting prediction. John, we got to talk mining stocks and sentiment real quick. We're running late already, so just on 5 minutes. I'll give you my 2 cents on it real quick, because it felt like as soon as the Fed started cutting interest rates, sentiments changed completely in the junior mining space. I mentioned sense of euphoria. It wasn't euphoric, but a sense of euphoria maybe for 6 weeks. And then the Fed said, we'll cut once. Now we're data dependent again. And that was the end of that. We have a new president moving into the White House. Nobody knows if we're going to see another cut in December. Personally, I don't think it's going to happen. So the mood is going to stay in purgatory, like in the middle of nothing. Like, so until at least mid and January, until the next Fed meeting, January 28th. What are your thoughts? What's your thought on sentiment here?
Well, $2,600 an ounce gold should have lit a fire under the mining stocks. If we were talking, if it was 3 years ago and we were talking about this, and I said, 2,600 is coming, you'd say, oh my God, the miners are going to go up by 4 times that amount. And I would agree with you. That they haven't is due in part to the fact that mining has gotten much harder than it used to be. Later today, I'm going to post a thing on copper, where there's this really good graph, a really good chart that shows the size of copper deposits and the depth over the past century. And 100 years ago, that you would find these giant copper deposits right on the surface, where you just strip mine that ore and you send it in, and the money just rolls back into your bank account. And then over the years, the deposits that people are discovering have gotten smaller and deeper. In other words, much harder to exploit. And that's happening everywhere in all the different extractive industries, and absolutely in gold and silver. So it's much more expensive to mine gold and silver now than it was. And labor is harder to get. There's a whole generation of mining engineers who are retiring, and the pipeline of replacements is much smaller. It's not big enough to basically replace all those guys who are retiring. So you got to pay up to get good talent now too. So you combine, higher energy costs and higher labor costs and lower grades and deeper deposits, and you get much greater difficulty in profitably mining. And that's happening to a lot of the big miners, where their revenues are going up because of higher gold prices, but the profitability that should have flowed from that higher revenue isn't really there yet. Profits are going up for some of the really well-run miners, but not spectacularly. And for some of the others, profits are up hardly at all. Cash flow isn't what it should be, and it's better. It's not going down or anything. It's just not like growth stock levels of positive earnings trends and cash flow trends. Now, having said all that, Q4 numbers for the miners ought to be good again. Q2 numbers were good, Q3 numbers were good, because the price of gold was going up, and that was filtering to an extent down to the bottom line. So, the operating environment is better than it used to be for the miners, and there's going to be another quarter, because the average price in this quarter has been higher than the average price in the third quarter. So the miners are going to report higher revenues again, and maybe this time it's enough to to generate some really good cash flow numbers and get onto the screens of momentum investors. And that might do it. That might send a lot of outside capital into the mining industry, or at least start that trend. So, don't give up yet with miners, but understand that the higher the price of gold goes, the better the operating numbers will be for the miners. And there's a point out there at which generalist investors recognize it and get excited by it, and then the miners start behaving well again. So I don't know when that is, but it could be that Q4 numbers are really good and the gold is still high, and that excites people about the industry.
We're in a very speculative market. Like, I almost call it is an ultra high risk market, the mining space. Why, when you mentioned we're in risk on mode, like, why don't the miners fall into that category?
Well, part of it is that the numbers that the miners are generating don't really justify speculative valuations. They're generating some pretty good numbers, but first of all, those numbers have to be sustainable. In other words, gold has to stay at this level or go up, which is that's a bet that you're making when you buy a gold miner. And the second thing is that there's an awful lot of other stuff out there. Like if you're a speculative minded investor, you're buying Bitcoin or Nvidia or Tesla or just the NASDAQ, NASDAQ.
Stop,
call
John, you're
options
hurting me.
or something.
You're hurting.
Yeah. But see, that changes because when you get speculative bubbles like we have out there now, that trend reverses big time at some point. And, there could well be a time here when the NASDAQ is down by 40%. Gold hasn't gone down at all, and the miners are basically the only entities left generating positive quarter-over-quarter comparisons. That's a real possible scenario out there. And so, miners, and in any event, the miners are one of the only groups that are still cheap. So if you're a value investor, then the miners are actually behaving in ways you like to see because it gives you an entry point for something that ought to improve dramatically in the future. So, I still own a lot of mining stocks and I'm looking for high quality names, and it's just the downside is that they haven't gone up yet, but the upside is also that they haven't gone up yet too much, and that there's still some bargains out there. So, but yeah, the time will come. I mean, if gold goes to $10,000 an ounce, then the miners are going to be the dot-coms of that era. So it's still out there waiting to happen, and just hasn't happened yet for some operating reasons. But I still think miners are to be owned, at least the really high quality ones. Don't dick around with low quality in this market, but buy high quality names and then expect them to do well over time.
No, fantastic. John, you write a newsletter in that regard. Where can we find more of it?
Yeah, it's at rubino.substack.com, and it's geared towards actionable advice for the stuff that we talked about. In other words, okay, this is coming, so what do we do? And so far, so good.
Absolutely. John, worthy of a Sunday episode, about an hour long again. We always manage to push it out that long. It's always fun to talk with you. We have so much to talk about, so many topics to cover. I really appreciate you coming on. It was a great, great pleasure to catch up with you again. Thank you so much for your time.
Thanks, Kai. It was fun. And by the way, we found my limit here. You can hear my voice kind of going out. So this is as long as we can talk.
Perfect. No, I love it. John, thank you so much. And to everybody else, thank you so much for tuning in. I hope you enjoyed this conversation with John Rubino. Make sure to check out his Substack. It's great content on there. I'm subscribed. I get it into my inbox almost daily, or whenever he puts something out, but it's almost daily. It's quite a bit of good content. So make sure to go check it out, rubino.substack.com. And make sure to hit that like and subscribe button here. It's a free way to support us. We don't charge you for these interviews. You might have to endure a few ads here on YouTube, but we don't charge you. So we truly appreciate it, and thank you for tuning in. If you have any comments, leave them down below. We do want to hear from you, and to tell your friends, educate them, help them get educated. That's the whole point of this channel. I've been saying it before. I'll say it again. I hope it helps. Thank you so much for tuning in. We'll be back with lots more. Thank you.